financial argument. Follow us on YouTube.
His right-hand man basically said to me, said, Amir, Mr. Lee's not just looking for investing in gold mines. He literally wants to find more ways to take physical gold back to Hong Kong and have that exposure. This is a guy who's the largest individual investor in mainland China.
Hey friends, thanks so much for tuning in. I am really excited for this call. I have back on the line Rick Rule. He's the president and CEO of Sprott U.S. Holdings, Inc. We also have on the line Amir Adnani, chairman and founder of Gold Mining, Inc. He's also the founding CEO of Uranium Energy Corp. First, we'll welcome Rick. How are you, Rick?
Fine. Thank you for giving me the opportunity to address your audience.
Hey, I'm really excited about this with so much going on in the world. Goodness, where do we even begin? And Amir, thank you for joining us as well.
Yeah, great to be here with you.
Well, I'm so excited to talk with you guys about precious metals. We see gold and silver really, fighting to stay around that 200-day moving average. So much to talk about geopolitically as well, with China and Russia announcing that they are bypassing the dollar and now shifting to gold trade between themselves. The conflict in Syria is heating up. We could soon be in a hot war with Russia if we're not careful. It just seems like we're on the cusp of World War III, if not a shooting war, Rick. It'll certainly be a monetary war. We seem to be in the midst of that. What's your take on what you're seeing geopolitically?
Well, we're above my pay grade in one regard. My suspicion is that the market finds narratives to support its action. And I actually believe personally that the facts surrounding society's debts in the Eurozone, debts in Japan, debts in China, debts in the United States, are more important to the gold future than the narratives surrounding geopolitical events. And that the narratives surrounding geopolitical events are what people are using as a rationalization for their, I guess, rather belated discovery that precious metals are at once mediums of exchange and stores of value, that is, better forms of money than fiat currencies are themselves. I have to say that given the malaise that gold markets have suffered through for the last 5 years, and the fact that I've been long, any constructive narrative is hopeful. But my suspicion is that even if tensions in the Middle East subside, and even if tensions on the Korean Peninsula subside, that precious metals will do well as a simple consequence of, as an example, $20 trillion in on-balance sheet liabilities in the United States at the federal level, and $100 trillion in off-balance sheet liabilities. I think that's the real issue here.
Right. Yeah, I do too. And before we turn this over to Amir with his response, I want to ask you, our friend Craig Hemke, who goes by the name Turd Ferguson, wrote a great piece just the other day about, supply and demand, in the gold and silver market. We know that there's endless supply because of the manipulation in the banking paper. They can print the stuff out of thin air. And so there's an endless supply to meet really a finite, although growing demand. Given that endless supply, are you as surprised as I am to see gold and silver doing as well as they've done, fighting for that 200-day moving average territory? Because we know the bankers would love to see them fall far lower or force them lower.
My own comment on that is really twofold. The first one has to do with manipulation. I believe that all markets are manipulated. But I remember in 2010 and 2011 when it was pretty obvious to me that the trade desks at the major banks worldwide were manipulating the price of gold and silver up as opposed to down. And I suspect we'll see that again when that's the easiest thing for them to do. We feel bad in the gold and silver market, but understand that LIBOR has been manipulated, and even the U.S. Treasury market, the deepest market in the world, has been manipulated from time to time for the benefit of the trading desks. The second thing, the second point is these are really interesting times in the sense that this is the third time in my career that gold and the U.S. dollar have moved up simultaneously. That happened in 1975, the latter half of 1975. It happened at the end of 2001 and the beginning of 2002. And in both of those circumstances, the dollar was doing well, not because necessarily of strength in the U.S. economy, but rather because of the relative strength of the U.S. currency relative to other currencies and a safe haven trade. I can't tell you if past is prologue, but it's interesting to see gold do well with the U.S. dollar doing well against other currencies. Two things have happened, of course. It means that gold has done extremely well in foreign currency terms. But it's instructive to note, too, that in the two prior times in my career that this has happened, that the dollar has rolled over temporarily and gold has done extremely well in the aftermath. And it wouldn't surprise me to see past being prologue here.
hmm Well, I have a very, very interesting article that I'll get to here later in the conversation. Goldholics Anonymous by Kevin Moore over at the Macro Tourist blog. He really he came up with something very interesting here. Well, I guess I'll just share it with you guys now. He suspects that the Japanese have now tied the yen to the price of gold, and it's very interesting. I'll show you. I'll put the chart up here on screen. Since the beginning of the year, the yen has been trading in lockstep with gold. So I definitely think there's more going on here geopolitically as it pertains to gold. So Amir, let me ask you, as the chairman and founder of Gold Mining Inc., and guys, full disclosure, I don't own a single share of Gold Mining Inc. at this point, but given the geopolitical background and the tumultuous nature of what we're seeing globally right now, are you seeing a noticeable change at all in sentiment from strategic investors and funds as it relates to those funds and those fund managers looking for gold mines and gold properties? Are we finally starting to see a sentiment change? Because clearly we're seeing the price of gold do well. When does that trickle back over to the shares?
Well, I tell you, I'll share a couple of very interesting observations with you in terms of people and investors that are now looking for gold that over the last few years were maybe not that interested in it. I'm in a unique position, and I'll share something special with you that, one of the wealthiest individuals in Asia, who's based out of Hong Kong, has been a major backer of what I'm doing at Uranium Energy Corp, or uranium business, along with Rick and the Sprott Group. This individual's net worth, when you look it up online, his personal net worth is about $35 billion. So you can say it's just as good as a fund, and or would be the equivalent of a large fund. And for the first time in a number of years here, Sean, of working with his team when it comes to investments in commodities that they believe were important to the strategic growth of China, for the first time they're looking for gold-related investments. And really the comment was even very interesting from the person heading this initiative for Li Ka-shing, who's the individual I'm referring to. His right-hand man basically said to me, said, Amir, Mr. Li's not just looking for investing in gold mines. He literally wants to find more ways to take physical gold back to Hong Kong and have that exposure. This is a guy who's the largest individual investor in mainland China. And I tell you, over the last few years of having worked with them on the energy side, this is the first time I'm seeing them so aggressively looking for gold-related opportunities. That's one. The second one is, we're very fortunate that gold mining, one of the board members of our company who has been really a founder of the company since day one, is a Brazilian billionaire by the name of Mario Garneiro. And him and his family and bank that he runs in Brazil have been shareholders since day one and own over 10% of the company. And when I looked at the level of interest that his organization have in terms of wanting to have that direct exposure to gold, and I talked to them about why they're looking at this. Sean, they're focused on one factor that we seldom don't think about. We're so fixated on price of gold. What they're focused on, what the super wealthy, in my opinion, are focused on, what the billionaires are focused on, is the fact that gold plays that hedge in the portfolio, that it's the insurance in a portfolio. And it may not necessarily be as critical to think whether it's $1,200 an ounce or $1,300 an ounce. We fixate so much on the price, and we forget that, look, irrespective of what it's trading at on any given day, it's meant to be an insurance policy. Is meant to be protection of wealth and preservation of wealth. And it's a great reminder when you look back to the first trading day after Brexit a year ago. And I remember looking at my own portfolio and, I'm looking at the market and everything is red. The Dow is down over 500 points. The only thing up are gold stocks, etc. And that's a great reminder. And speaking of that, let's not forget, you talk about political turmoil. You got the first round of the French election coming up here on April 23rd. And if that thing ends up going in a way that's bad for Europe, with Le Pen and that group winning, you're going to have a Brexit-like event on steroids. I mean, you're going to have a situation that could be even far more profound than the impact that Brexit had a year ago. So anyways, I'll leave it there. But, you can see some of the other considerations here to think about in terms of that the hedge in the portfolio that gold is meant to provide. And we need it now more than ever.
Yeah, well, it's not unsurprising to hear you talk about that Asian billionaire who's interested in actually taking delivery of physical gold, because we've seen the shift from west to east with the foundation of the SGE, the Shanghai Gold Exchange. And I mentioned this early here in the interview, but I'll just flesh this out again for folks. Moscow and Beijing joined forces to bypass U.S. dollar in global markets. Shift to gold trade. This appeared on April 2nd at Zero Hedge, and the first paragraph reads, "The Russian Central Bank opened its first overseas office in Beijing on March 14, marking a step forward in forging a Beijing-Moscow alliance to bypass the U.S. dollar in the global monetary system and to phase in a gold-backed standard of trade." End quote. So, folks, it's very clear now that the world is moving away from the dollar and towards gold. Fellas, I just wonder how many Canadian citizens or American citizens are aware of that fact. Rick, are people waking up?
Well, if you work at a place called Sprott, your audience is self-selected.
Yeah.
People don't come to us for bond funds. But I suspect that the market is waking up slowly. But let me give you a startling statistic that tells you what an awakening might do. I believe it was Morgan Stanley that published a study about a year ago pointing out that precious metals, physical precious metals, certificated precious metals, and precious metals equities occupied about 1/3 of 1% of the savings and investment assets in the United States. The corresponding number at the top of the last bull market, real bull market in 1981, was 8%. 1/3 of 1% now, 8% at the top.
Wow.
The 3-decade median was 1.5%. And I'm not suggesting to you that gold and precious metals related investments will ever get back to 8%. But I would suggest to you that they will, in this bull market, approach the 3-decade median, which was 1.5%. If that occurred, you would see
Ed, you have a call waiting?
a more
Ed?
than fourfold increase in demand for precious metals and precious metals related equities in a market that is 26% of global investment demand. And I think that could be reasonably dramatic. I'm not one of these doom and gloom guys who says that gold is going to win the war against the U.S. dollar. But if gold lost the war a little less badly,
Right.
in other words, if gold and gold equities market shares got up to 1.5%
Right.
of the investment and savings matrix in the United States, that would represent more than a fourfold increase in demand.
Yeah, just to get back to that median.
Yep.
Okay, well, that's very interesting. Well, okay, so let's talk about that. Gold has been performing well for geopolitical reasons or monetary reasons or a combination of both. But the juniors haven't done so well. It's been a battle. It's been a bear market. We had a nice run in 2016 for 6 months. But I guess the question is, do we need to hit 52-week highs in gold and silver to see these junior mining shares take off again?
3 observations, and yes, I'll answer the question. We do not have to hit 52-week highs. One of the reasons, from my point of view, I think there's 2 particular reasons why the junior gold equities in particular have lagged. The first is that in 2016, they did so well that they outran themselves. Most junior indices in 2016 doubled. Gold equities greatly outpaced the gold stocks. The second is more pernicious. which is that probably 80% of the junior mining stocks listed worldwide are in fact valueless. And it's very important that investors pick and choose. An index that doubled when 80% of the index has no value is a market in true need of arrest. It is my suspicion that you will see now, with gold doing reasonably well in US dollar terms, but the equities lagging the gold substantially, that the better gold equities will do probably extraordinarily well through the balance of this year. Not as well perhaps as 2016, but one can't hope for year after year after year of index doubling, particularly when the index itself is so lethal, when stock selection is so important.
Well, that's very interesting, because for those of us who are active in this space, it would be nice to be rewarded for being prescient, right? And so many of us feel punished, especially those of us who have been silver bulls for so long. We feel very punished for having been prescient enough to try to diversify away from the US dollar and into physical, tangible assets. So it would be nice to see us rewarded with a move far higher in US dollar price of both gold and silver. Now, as the world moves away from the US dollar as world reserve currency, I think we're going to see much higher moves in gold. Amir, let me ask you this. For Gold Mining Inc., your strategy has been obviously a very effective one, to buy ounces in the ground from distressed sellers and lock in that gold that's in the ground. It's a great business model. Are you still pursuing that specific model, or are you guys moving into exploration? I guess the question is acquiring these distressed assets still cheaper than exploration?
It really is a strategy that has worked well for us, but it really has centered around forming a view, forming a higher level kind of thinking around specific areas that we want to be in, rather than just buying companies or projects because they happen to be cheap. And so with that level of thinking and that approach, we still have really a great environment right now to be making acquisitions. Case in point, earlier this week, we announced our latest acquisition, also in Colombia, building on the acquisition we made late last year there. And this really has to do with this approach, in that we formed a view on the central Colombia and the Cocoa Belt there as being one of the most exciting places to be in right now for development and exploration of gold and gold copper porphyry projects. That was step one. Step two, we realized that we had the competitive advantage to get into Colombia. We have a board member who's based in that country through our 10% strategic shareholder, who's the largest investment banker in South America. We had the right relationships in Colombia. And we made an acquisition, Sean, in late last year of the Titiribi project, followed it up earlier this week with a second acquisition of a company called Bellhaven, that now combined, these two assets give us close to 12 million ounces of gold equivalent resource in one play. And we've consolidated an area that has never been consolidated before. We end up landing a mid-tier gold producer as a shareholder in IAM Gold. And so to me, if you can make acquisitions like this, where you've taken a view on a jurisdiction, you have a competitive advantage to be in that jurisdiction when it comes to people or board members or strategic investors, and then you go put the pieces together, it's an excellent time for that. And here's the data point to support it. The two acquisitions we've made in Colombia now have cost us about $29 million in stock. And if you just look at the replacement value of the 200,000 meters of drilling and geophysics and all other exploration work that has been done, it's well over $100 million, probably closer to $120 million, not to mention all the land that has been consolidated and paid for, and surface rights, and all the things that you need to do before you get to even a single drill hole being completed. So the same strategy is very much how we started out in Brazil. We focused in one state in Brazil, the state of Pará. We made all of our acquisitions in that one state. You realize geologic synergies, engineering synergies, environmental, administrative synergies when you have this approach. And so to answer your question, yes, I think within the confines of specifically going into areas where you have some leg up on others to be able to consolidate, you can still pick up projects and companies for way less than what it costs to replace the work. And more importantly, not to mention that if you're spending fresh dollars to go drilling and doing exploration, it takes time to do that. Exploration is risky, and so you're not going to have guaranteed hits and guaranteed resource results or resource reports that you can generate. So I'm excited by the fact that the one thing that's beneficial with this pullback we have in the gold equities, the breathing, the rest that they're taking this year from last year's big run-up, is that it gives a company like us the window to be able to find these accretive acquisitions.
Yeah, well, it's interesting too because it should be said for listeners, Amir, you and I have spoken, of course, in the past several times. The company used to be called Brazil Resources, and there was a name change, I think, in December 2016 to Gold Mining Inc., correct?
That's right. So as I was mentioning earlier, we started life in Brazil. We were called Brazil Resources. We were consolidating projects in Pará State in Brazil. Once we stepped outside of Brazil in 2015, made an acquisition in Alaska, then into Colombia, it was clear we had to change the name because obviously we were in 3 different countries and needed a broader mandate.
Yeah, so much larger scope than just Brazil. So it's on the TSXV as GOLD. And the question I wanted to ask you for the benefit of the audience is, let's talk about how many ounces of gold you have in the ground, and let's talk about the market cap, just to give people a visual on the assets here. What is the current market cap of Gold Mining Inc.?
Yeah, so speaking in U.S. dollars, because as you mentioned, we're listed in Canada under the ticker symbol GOLD. But in the U.S., not to be confused, our ticker symbol is GLDLF, and not to be confused with the ticker GOLD in the U.S., which is a $90 share price of Randgold. But in U.S. dollar terms, we're trading at about 160 million U.S. market cap. That's 160. And with this latest acquisition that we've announced earlier this week, upon closing that acquisition, our total and global measured and indicated resources approach 14 million ounces, and our total global inferred resources approach 11 million ounces. Those are gold equivalent. We have both majority of our resources, about 20 million ounces, would in all categories be gold, but we now have over 5 million ounces of gold equivalent as a result of very strong copper byproduct or copper mineralization that we have in our gold copper porphyry projects in Colombia and Alaska. So, Sean, you start to put that in perspective, and you look at how many companies in the world of Canadian listed juniors control over 25 million ounces of gold equivalent resources in all categories. And I would say that definitely puts us in the 1% club, because 99% of companies don't have that many resources. 99% of companies probably don't have even 10 million ounces of gold resources. Now, not all resources are created equal, and our projects vary obviously from project to project in terms of grade, in terms of style of mineralization, etc. But we believe that the method and the approach that we've had in terms of being very specifically focused in certain areas, realizing those operating and geologic and engineering synergies will be a great way to unlock value as we see the commodity price recover. And we're not doing anything that's different than what companies like Silver Standard did in the 90s in terms of accumulating resources in the ground of silver when it was out of favor or out of money, or what people like Ross Speedy did in the early 2000s with companies like Lumina Copper to acquire large copper resources in the ground. A great part of this strategy is about understanding and taking advantage of the cycles that the commodity business inevitably has and will have. But to go back to your original question, you can see that the company's total resource as a function of its overall market cap and size is a very interesting picture that gets painted quickly here.
Rick, let me come back to you and ask you, as one of the larger shareholders in Gold Mining Inc., I think Amir is probably the top shareholder in the company. Where do you see Gold Mining Inc. in the next 2 or 3 years from now? Your thoughts?
I'm too old and wise to answer that question directly. But let me answer it elliptically. The strategy, the hoarding strategy, or optionality strategy, as we call it, is something that's been successful for Sprott for 30 years. Amir mentioned some names. We backed a variety of companies in that strategy in the 90s. Companies like Silver Standard that went from 72 cents to $40. Pan American Silver, which went from 50 cents to $45. Lumina Copper that went from $2 to $160. The fact is that the strategy makes such superb economic sense. You know, one of the reasons it works is because if you believe that the gold price is going to go up, the idea that you can buy gold that's uneconomic at this price, that will reprice itself dramatically when the price goes up, is attractive in and of itself. But the second thing that people don't understand is that if you put a mine in production because you think the gold price is going to be up, it is often the case that when the gold price does go up, you have a hole in the ground where your gold used to be, rather than leaving the gold safely in the ore body to be sold or extracted at a later date. The truth is that there is no investment or speculative methodology I know that is as well supported by arithmetic as the hoarding strategy in an increasing gold price environment. If speculators believe, as I believe, that the next 5 years will be good for gold, the idea that you can buy that same gold in the ground now for $2 or $3 or $5 or even $10 an ounce, and then monetize that gold in the ground when the gold price does go up, if that's what you think is going to happen, for some number like $150 an ounce to somebody who builds a deposit, the arithmetic associated with that is overwhelming. And you have no operational risk. Remember that not mining, this sounds cynical, but it's true, not mining is a hell of a lot simpler than mining.
Right.
Leaving the gold in that first hole in the ground called a mine, rather than degrading it and putting it into a second hole in the ground called a vault, and running the high operating costs when gold prices are cheap, is really, truly silly arithmetic.
There's a little something called optionality, which is very nice too. So if we see the gold price go to $5,000 an ounce, then there's all sorts of reasons to start to mine that gold, and that becomes much, much more feasible and much more interesting conversation to have at $5,000 gold. And so you mentioned, for those of us who think gold is going higher, I think it's going very much higher. And I'll quote Benjamin Franklin here, who said, quote, "We are all born ignorant, but one must work hard to remain stupid," end quote. And for those of us that have woken up to the fraud of fiat currencies and the fraud of the Federal Reserve and the central banking malfeasance all over the planet, I think it becomes very clear what's going to happen to the price of gold in all currencies. And I'll wrap up with going back to that Goldholics Anonymous post from the Macro Tourist blog, in which faithful writer Kevin Muir writes, quote, "Even though there's a tendency amongst traders to assume gold is just an inverse US dollar play, this chart shows that the relationship is loose at best. But maybe we are looking at the wrong currency. While I was stumbling around my chart book, I came upon a chart of gold versus the Japanese yen. Holy smokes, since the beginning of 2016, they've been almost trading tick for tick." And he concludes, "But I want to stress that gold has not moved up solely because of Syria, Russia, North Korea, China, U.S. tensions. Yeah, maybe there's an extra $20 to $40 in it, but the real trend is being driven by other factors." Gentlemen, there is a monetary war going on this planet, and I don't think that ultimately the dollar is going to survive intact, certainly not in the same form that we've seen for the past 40 years. Amir, I'll throw it back to you. Any final words?
No, after what you just read and said, I'm in deep thought and what we're doing here. I mean, look, the stage is set in a very compelling way for gold, and we obviously believe that. That's why we set out 7 years ago to build this company, Gold Mining, and why I'm the largest individual shareholder of this company. And so it's, anyways, it's really great to speak with you about this, Sean. But for us, the final words really would be that from a company point of view with Gold Mining, we will continue to take advantage of the dips in the gold market and weakness in gold equities to make more acquisitions, to pursue the as Rick put it, the hoarding strategy, because I truly believe in the school of building this kind of value through resource acquisitions. This is really a school that was created by people like Rick Rule, Bob Quartermain, Ross Speedy, some of the most successful people in the resource business. And so we're trying to execute off of a page of a playbook that is tried and tested. And I believe in the last 7 years, we've executed it well to bring in the right combination of assets to get bigger. We'll have more acquisitions. And when the market picks up, we'll look to sell or joint venture, all or some of the projects. But ultimately, I'm excited about the fact that this window has given us the opportunity to make more acquisitions like the one we just made. And I'm confident we'll have more to come in the coming weeks and months.
Well, excellent. And Rick, you're such a wonderful orator. I sort of see you as the Mark Twain of the space. So final word from you, sir.
Well, I probably shouldn't quote Mark Twain about a miner being a liar next to a hole in the ground. But anyway, I think what's important to note in the context of Gold Mining Inc. and optionality is that Amir is following the game plan established by his predecessors, by the Bob Quartermains and the Ross Beatties, extremely well. There's a couple things you have to do. You have to, first of all, have the courage and the commercial sense to buy ounces in the ground very cheaply. The second thing that you have to do is less well known, but Amir is doing a good job of this just like his predecessors. You have to articulate your vision, and you have to build financial backing. You have to, in effect, establish a financial brand. And this is generally a high net worth retail brand, not an institutional brand. When you do this, you lower your cost of capital. In other words, you raise your share price so that each successive ounce comes to you on an accretive rather than a dilutive fashion. And finally, when your brand value is established enough, when you're selling at enough of a premium to the other 2,000 junior miners around the world, you can actually begin to beneficiate the projects that you've acquired. Not put them in production, but in fact explore. It is a truism, as I have been taught by Ross Beatty and Bob Quartermain and Robert Friedland and others, that the best place to explore for gold is in a gold mine, in the shadow of a head frame. And having accomplished the acquisition of 20 million ounces and being on his way to having accomplished establishing Gold Mining Inc. as a brand for optionality, Amir will enjoy the cost of capital advantages that will ultimately enable him to beneficiate the deposits that he acquired at those low prices. That was the secret sauce in the Silver Standard success. It was the secret sauce in the Pan American Express, and it was the secret sauce in the Lumina Copper success.
Well, guys, you've heard from two of the brightest minds in the business today, so for those who may want to check it out and delve a little further, this is not an endorsement to buy or sell any stock, but I will give you the tickers. The ticker on the TSX Venture Exchange is GOLD, G-O-L-D, and in the States on the OTC, QX, the ticker is GLDLF. Our guests have been Rick Rule, the President and CEO